Okay, here's a short explanation of flow-through shares for you to get a general overview of how the whole dynamic works. It starts with investors, and typically they're Canadian investors because these all work against Canadian income, the tax advantages that is. The Canadian government and the Canadian Revenue Agency are the other players. Then, of course, there's the Canadian resource sector, and finally the Toronto Stock Exchange. So these are the four players that are involved in the flow-through dynamic. It works like this. Basically, the Canadian government has decided and understands that Canadian resources are a great big part of our economy, and they want to create the most advantageous and opportunistic situation for Canadian resource companies to stay as world leaders in mining and minerals. So what they've done is they've provided to those resource exploration companies fantastic tax advantages. Now, why they've done that, one of the effects of it is that they're giving investors the opportunity when they buy shares on the Toronto Stock Exchange that are shares of those exploration companies because they trade on the stock exchange, then those tax advantages flow through the resource company directly to the investor, basically to the tune of 100% tax deduction. So just to go over that again, the Canadian government and the CRA give tax deductions to the Canadian resource sector. Those resource companies then trade on the Toronto Stock Exchange. When an investor takes a position and buys some shares in one of those resource companies, and if they're flow-through eligible shares, then those tax advantages flow through the resource company directly to the investor. So let's take a look at some of the different parts of this puzzle just to scope it a little bit further. So firstly, there's the investors. And the main advantage is the tax breaks. 100% tax deduction is standard for mining and mineral flow-through eligible common shares. What those tax deductions do is that they offer a substantial downside protection, and that's because the exploration end of natural resources tends to have a bit of a higher risk profile, and they remove that risk by the tax breaks. So there's a fantastic downside protection. And finally, within a limited partnership, there's a short holding period that is really delivering to the investor their tax breaks and return of capital in a very brief period of time. So you got the Canadian government, and they're the lawmakers, and they're the ones who have decided that they have a vulnerability. Say 10, 20, 30 years into the future, they need to have as many natural resources on tap as possible. Nickel, iron ore, precious metals, these are all dwindling resources, and they need to continually be finding new sources within the territorial area of Canada. So what they've done is, through the Canadian Revenue Agency, they've created tax incentivized program known as flow through. So a little bit about the Canadian resource sector itself. It's a large source of employment for Canadians, into the hundreds of thousands when you consider all of the mining, the processing, and then downstream from that, you have the fabrication and manufacture of goods that are made from natural resources. And 80% of the rocks and minerals that we pull out of the ground are going to be exported either as raw materials or as partially finished products. So it's a very important part. It's part of the backbone of our economy, and this is why the government's so interested in it. So then you have the Toronto Stock Exchange, which is one of the most reputable stock exchanges in the world for mining and minerals. And in fact, worldwide, it is attracting capital from all corners of the world because of the stability of the banking environment and the professionalism in regards to the conducting of the business on the Toronto Stock Exchange. There's on the Toronto Stock Exchange proper, there's about 400 mining companies, and then on the Venture Exchange, there's about 1,000 exploration or mining companies. And then we have world-class industry professionals that take advantage of the fact that so many different companies are trading on these exchanges. And the particular expertise really becomes honed to a point when you start to consider the tax advantages that are offered with these flow-through arrangements. So those are the main players in regards to the flow-through dynamic. Just to recap it once again, you've got Canadian investors who will have an interest in protecting their income from high taxes. One of the ways that they can do it is to participate in the Toronto Stock Exchange in regards to companies that are resource exploration. It works for both oil and gas and for metals and mining. And those tax advantages that the investor enjoys come directly from the Canadian government and the Canadian Revenue Agency. They go through the resource company and directly to the investors. So each one of these four different players will be explored in further videos, but this is the general overview. And thanks for your time.